All right, let's just jump right in. We're going to build a clear step-by-step strategy for taking back control from debt. And I mean a real plan, no vague advice, something you can actually use in 2026. But before we get into the how, I want you to think about something. What is that one thing that's quietly in the background, kind of dictating your financial decisions, maybe delaying your dreams, and for sure slowing down your ability to build wealth? Now, your first thought might be inflation. And look, that's definitely a factor, but it's not the main culprit. It's not the one pulling all the strings. And it's not just about how much money you make either. You know, a lot of people with high salaries feel just as stuck. So what is it? It's debt. That's the one. Specifically, that high-interest revolving debt from things like credit cards and personal loans. For millions of people, this is the number one financial enemy. And today, we're going to build a plan to take it down. So to defeat this thing, we've got to understand it first. Let's break down what debt really is and, why it has so much power over us. At its core, debt is pretty simple, right? You're just borrowing from your future self to pay for something today. The real problem, the trap, kicks in when two things happen. The interest rate is sky high, and you don't have a solid plan to pay it off. Now, not all debt is the same. There's what you could call manageable debt, like a mortgage on a house that grows in value. That can be a tool. But what we're focused on destroying today is bad debt, the kind that only creates more interest, not more wealth. Okay, so why is this such a huge topic right now? Why is getting out of debt the number one goal for so many people in 2026? Well, the reasons are really, really important to understand. It really comes down to three huge factors that are making this more urgent than ever. First, those interest rates are through the roof. Second, more and more people are realizing they're caught in the minimum payment trap. And third, the mental stress of it all, it's leading to serious burnout. Let's start with those interest rates. The average credit card right now is charging between 20 and 28%. I mean, just think about that. That's an insanely high number. It means every single day you carry a balance, your debt is getting way more expensive. And that leads us right into the minimum payment trap. The banks love it when you only pay the minimum. Why? Because it can keep you in debt for 10, 15, sometimes even 20 years. You're basically running on a financial treadmill, paying off all this interest while the original amount you borrowed hardly budges. So how do we fight back? This is where we get strategic. We're going to look at the two most powerful, most proven methods for absolutely destroying debt: the Snowball and the Avalanche. Think of these as your two main battle plans. Okay, first up is the Snowball method. This one is all about psychology. It's about building momentum. You list all your debts, from the smallest balance to the biggest, and you attack that smallest one with every extra dollar you have. Once it's gone, you get that quick win and you roll that payment into the next smallest debt, creating, a snowball of cash flow. The other strategy is the Avalanche method. Now, this one isn't about feelings. It's about pure, cold, hard math. You list your debts by interest rate, highest to lowest. Then you attack the one with that killer high interest rate. This method will absolutely save you the most money over time. Let's look at how this plays out. In this particular example, the order happens to be the same for both methods, which can happen. But imagine for a second that card C, the big one, had the highest interest rate. The Snowball method would still tell you to pay off card A first for that quick psychological boost. But the Avalanche method would say, no way, go after card C's crazy interest rate to save the most cash. So it really boils down to this: psychology versus math. The Snowball is perfect if you need those early wins to stay motivated. The Avalanche is for you if you're super disciplined and just want the most efficient path. The best part? Neither one is wrong. It's about picking the weapon that fits your personality. Now, let's get even more tactical. Since credit card debt is usually the most common and the most dangerous kind of bad debt, let's focus on three things you can do right now. First, and this is non-negotiable, you have to stop the bleeding. That means you freeze your cards, maybe literally in a block of ice, and you stay far away from those buy now, pay later things. Second, pick up the phone and call your bank. Ask for a lower interest rate. You'd be surprised how often it works. And third, you can look into a 0% balance transfer card, but be careful. You have to be disciplined enough to pay it all off before that intro rate disappears. All right, let's pull all of this together into one simple, powerful roadmap. This is it. This is the complete journey from being totally buried in debt to actively, confidently building your wealth. And it all starts right here with $1,000. Before you go all out on attacking your debt, you need a little buffer. Your very first step is to save up a starter emergency fund. This little cushion is what stops a flat tire from becoming a whole new credit card balance.
So once that starter fund is safe and sound, that's when you unleash your chosen method, Snowball or Avalanche, on all that high-interest debt. After it's completely gone, then you build up your full emergency fund, enough to cover 3 to 6 months of expenses. And only then, with that solid foundation beneath you, do you shift your full focus to investing and building long-term wealth. See? It's a system, not a punishment.
As we start to wrap this up, I really want this one idea to stick with you. The goal here isn't just about getting rid of something bad. It's about taking back control. Because it's that control over your money that's what truly unlocks your ability to build real wealth. And finally, please remember this. It is so rarely about needing to earn more money. It's about creating order and having a clear plan for the money you already have. The moment you reduce the chaos in your finances, everything else, investing, building wealth, it all starts to fall into place.